All the major indices eking out small gains on this session, but those benign results really belie the increasing anxiety and concerns. Underscoring this, in fact, this notion was the fact utilities were the best performing sector of the session. Now, much of the concerns revolve around just one word. That's leadership. Market and economic news dominated by leadership and achievement, or maybe I should say a lack of leadership and achievement. Three men with storied careers reaching the pinnacles of their respective professions, but facing some difficult times even as they try to either protect or extend their legacies. Roger Goodell, big story today. He's enjoyed an amazing run as commissioner of the NFL, bringing league's revenues to more than $13 billion last year. In 2010, it was $8.5 billion. By the way, Goodell has stated that his goal is to top $25 billion in annual revenue by 2027. Now, of course, the NFL is a private business and owners are, well, they're probably loathe to audible at this particular point, but they do have some serious issues when it comes to re-signing Roger Goodell. He's had a series of non-financial issues from Ray Rice to the current kneeling controversy. And we know Dallas Cowboys owner Jerry Jones is balking at the notion that the league should renew him in 2019 at $50 million a year and a private jet. Speaking of private jet, turns out Jeff Immelt had two jets while he was at the helm of General Election. One, he took the meetings, and the other, that would shadow those trips. I guess that's what you would call the ultimate spare tire. But it is certainly fitting an example of all the miscues that he made when he was CEO of that once giant company. Immelt also, of course, had the misfortune of following a legend, Jack Welch, whom many, including myself, consider the best chief executive officer of his generation. Although GE was founded by Thomas Edison in 1889, they introduced all kinds of products from the giant electric locomotive to nuclear power plants. That company was limping along when Welch took the helm in 1981. Fast forward 20 years, and under his dynamic and aggressive management style, Welch left GE as the most powerful company in the world, and its stock market value up 4,000%. Well, today, GE cut its dividend. In fact, it's the largest corporate dividend cut in history outside of the 2008-2009 financial crisis. They got rid of $4 billion. They also lowered their financial outlook for next year. By the way, people have been tweeting me all day, are you a buyer? I'm not a buyer yet. I do suspect, though, that traders and maybe some value investors will start kicking the tires. Remember last week, bottom fishing and these beaten down stocks and sectors really took off. In fact, today we saw it with Mattel, up big on a potential takeover by Hasbro. And that trend also continues with these beaten down names. It's going to be up tomorrow, one at least. Buffalo Wild Wings soaring as much as 27% in the after hours right now. The news is Work Capital making a bid to buy the company. By the way, mergers and acquisition was the only thing missing from this rally. But I think we probably are ready to see renewed takeover mania. Now, for all the talk of how impressive this market has been, there are a lot of oversold stocks out there. A lot of companies on the other end of that with rich currencies that, well, you could use it for exchanging all-time highs. You know, you can buy some companies. Oh, by the way, also after the close, Caterpillar posted remarkable retail sales number for last month. The company saw its total machinery sales up 19% from 13% in September. Energy and transportation up 23% from 5%. You want to talk about momentum. By the way, there is a manufacturing renaissance, and it's not just in America. The good news, it's gaining momentum. Here's the bottom line. I think the market is gearing up for a big leg higher. It's up to Mitch McConnell and the Senate Republicans not to mess this thing up.